Good afternoon, everyone, and welcome to the Monday Open hosted by Vantage Markets private client team in Australia. My name is Jeff. Today I'm joined by Ollie, who is a new starter to the team. Ollie, g'day, mate. Ollie's actually on a different camera because apparently the microphones bleed through. I don't know what that means. But we do sit next to each other on the desk. Ollie, do you want to have a bit of an introduction of yourself?
Yeah, thanks, Jeff. So I'm new to the Vantage Markets private client team. My background is in the support side of financial markets, specializing mostly in trade executions and investigations. I'm very happy to be here on call with you today, Jeff. So I'll pass it on back to you.
Awesome. All right. So this is something that we've been doing for a little while here. You guys all know pretty much the way it works. We talk about last week's events that moved markets or that didn't in this case, in last week's case as well. We'll also talk about some of the events that are coming up for this week that we're looking at as potential market movers. We'll do a little bit of technical analysis and then we'll answer some client questions at the end. So last week was all about interest rates. We had the Japanese, US, and UK all leave their interest rates unchanged. Every one of those was pretty much as market had expected. I was thinking there was a little bit of risk that the Japanese might hike rates just because it was a Japanese holiday and they like to mess around with people. But they didn't. They held fire. They didn't actually change anything with their bond buying either. So the Japanese pretty much did nothing. The US and the UK both kept their rates unchanged as well. I think the market was expecting about like a 15 or 20% chance of a cut in the UK, but that didn't eventuate. The indicator with that was that the month before, the vote for the cut wasn't unanimous. So that's usually a really good reason that, or a really good indicator that they're not, on the same page in terms of what they're doing. But they all left rates unchanged. The Swiss National Bank did cut their interest rates. They cut their interest rates by 25 basis points. That was, again, as broadly expected. I think the futures markets over there in Switzerland had priced in 90-something% chance of that. They had pretty much flagged that in the prior meeting as well, but they've also flagged this time that might be it for now. I would expect that looking forward to next month, Japan might hike rates, but not really all that much chance. Maybe we'll hike rates. The US will do nothing until we get some sort of clarity around tariffs. Tariffs being inflationary. The UK probably going to sit pat for a bit, as will the Swiss. Last week we also had Australian employment numbers, and they came in dreadful. The market was expecting a 30-something thousand gain, and we had like a 50-something thousand loss. So it was the first net loss I remember in a little while. Not a great sign and not a great start for kicking off into an election cycle shortly. So that was pretty much last week. I think broadly, if you look at the charts, the dollar was pretty much all over the place. There wasn't really much in the way of a clear directional move on the dollar. I think we finished Friday pretty much where we opened up on Monday across most of the majors. There was a little bit of day-to-day diversity between the movements. I think there were some days where the dollar was weakening against the euro and firming against the yen. But I think broadly over the course of the week against the majors, and they're just the top 5 currencies, I think the dollar finished about flat. The weak Australian employment data did provide a little bit of weakness or a little bit of heaviness to the Aussie dollar at one stage, but it wasn't very much. I think the market is a little bit US dollar dominated at the minute and is just kind of holding pat, waiting to see what these tariffs are doing. What do you reckon, Ollie? Anything to add on that?
Not really too much to add on that. I think, yeah, as you say, most of the news is kind of waiting on the news for the tariffs. I think that is expected to come out early next week. So should see some volatility on the markets in the lead up to it.
All right, good. Because as traders, we do love the volatility. All right, that was last week. Ollie, did you want to run through what's coming up this week?
Yes, would love to. So lots of eyes on the upcoming budget release this week for Australia, especially in light of the election later this year. Latest news announced the Labor Party found more than $2 billion in budget savings, while the Treasurer Jim Chalmers hinted towards a budget deficit forecast. Should the budget deficit be confirmed, which personally I think it will, we'll be expecting to see a depreciation on the Australian dollar. The announcement itself should bring some volatility into all the Aussie dollar pairings, so potentially some good opportunities for any Aussie currency traders. On the next day, on the Wednesday, we have the AU CPI release. Forecasts are currently expecting a rise in CPI above 3%, in turn putting further pressure on the Australian dollar. Then lastly for this week, I've got the US final GDP. So we'll be focusing on the GDP read with forecasts expecting a 2.4% rise compared to the previous 2.3%. An improvement in the GDP reading should see an uptick in the dollar, seeing its improvement against major currencies. However, at the moment, the dollar is still facing some uncertainties in the face of the imposed tariffs. Announcements on the US tariffs are scheduled early next week, with higher inflationary pressures on the dollar being the expected outcome. So overall, given the context for the week, I would expect to see some volatility on the Aussie USD pairing alongside the other USD pairings. So yeah, I'll pass that back on to you now, Jeff, for the technical analysis.
All right, just before we jump into text, I wanted to add that that budget announcement comes out Tuesday evening. There's a very large rumour going around the market that depending on how that's received, and how it's received will be defined by the headlines in the Sydney Morning Herald and the Australian the next day, will determine whether Albanese actually calls the election. If it's well received and it looks like this is going to be a very, very big spending budget, he might call the election. And if it's not as well received as he expects, people do love to get free money when it's taxes that we've already paid. But if it's not received as well as what he hopes, it might be pushed off. But the rumor is by the end of next week, there's a very good chance that we're going to get an election date. We're all waiting for that with bated breath. Technicals. So because the markets were a little bit kind of flattish over last week, I was looking for something that was a little bit interesting to talk about. And I can't actually believe I'm saying this out loud, but the one that I actually found was the Kiwi. Everyone, even Ollie's been sitting with me for a week, and even he knows I'm not a big player in the Kiwi. What we've seen is if you look at that really big, this is a daily chart on the Kiwi dollar, and generally as a market convention, whenever we say one market or one currency pair's name, it's always against the dollar. But you can see that pretty big move down, which kind of controlled price from September last year all the way down to kind of the first or second week of January. That's since been broken. Price is doing a nice little upwards channel, which could be a pennant. It could be a consolidation of the prior move. But regardless, it's broken out. It came back down to support that trend line again. That's that absolute low where it's touched and then taken off again. So that line was obviously really quite important. It's been well and truly broken. And, what's next for Kiwi? So if we kind of zoom out a little bit to exactly where that spot is, you can see that it double tested really quite close to that cross point. Came back down, tested the upside to hammer out where that top of the channel is, then came back down, tested the prior trend line and bounced off really nice and hard. It's respected the top trend line now 1, 2, 3, 4, 5 times and the bottom trend line twice, and is currently holding right in the middle. So these are my I like these sorts of setups when something's in the middle of a channel because, the channel is pointed upwards. Long term, it's still kind of in that bearish trend because it's just still below prior failure lows. But, there's certainly opportunity there. What I like to see on that daily also is that price has bounced off and just held above that 38.2% retrace from that really big move down. So we're at really quite key levels at the moment, which again is I like. That channel support at the moment is coming in at about 56.30. I'd be comfortable to be quite long above there with stops above. So as we get close to about 56.30, that might be a good place to just scale into some longs, just small bits, add to the position as it falls. And that 38.2% retrace comes in at 58.50. So if you get them at 50, or if you get them in at 56.50 with like a 25 basis point stop, you could be targeting 58.50, which is a 200-point move. Not bad. I mean, you'd probably take that every day of the week if it was given to you. So that's it for technicals. That's what I quite like to look at. I mean, the clients that I've spoken to on the phone, they know that my technical trading uses Bollinger Bands a lot, but I do quite like when price does break these long-term trend lines. They've normally, they're trend lines for a reason. And I mean, the more a trend line is respected, the more it's important. you look at that big trend line down. There's 1, 2, 3. I mean, plenty of touches. It was very, very important level. But then it kind of gets to that stage where fundamentally it can't go very much lower. It was due a bounce. There you go. Ollie dropped off, came back. So that's the technicals for us today. We're rushing through a little bit because we do have some questions, and they're really quite deep questions today. Ollie, did you want to just answer this one about the Australian budget for me?
Yeah, so I guess for the Australian budget, as I spoke on before, I think right now the forecast is kind of facing towards a deficit. I wouldn't really expect anything other than that to happen at the moment. So should a deficit happen, I would expect to see depreciation on the Australian dollar, especially given, the news of the tariffs probably next week as well. I would genuinely expect to see some downward pressure on the Australian dollar, but it's hard to really confirm at the moment just with the volatility in the markets.
What is it I call the Aussie dollar, Ollie?
Skipping my mind at the moment.
The Aussie peso, Pacific
Oh,
peso. Fundamentally, it's hard for me to be bullish on the Aussie dollar just because you look at Aussie against the US, their economy is 10 times the size of ours, and our currency's worth half theirs. That doesn't really equate to equality to me on a fundamental kind of valuation basis. This budget is going to be massively spending. This is going to be huge. We're going to see record deficits. Currency people don't like that. It's not going to be supportive for the Aussie dollar at all. So, if you're traveling overseas, I wouldn't be. I'd be looking to hedge. Let's put it that way. Question 2. I'll take this one. Why is the big dollar diverging against the other majors? So big dollar is generally the one that leads currency moves across everything, just because it's the biggest, it's the most liquid, it's the largest reserve currency. It ticks off a lot of boxes. The actual free float of the US dollar is about 4 times that of the euro and about 8 times that of the yen. So there's just more of it. It makes a bit more sense for markets to be focused on what the dollar's doing. It's also the largest economy in the world. So generally speaking, when we see dollar moves, when we see currency moves, we see the dollar kind of leading the way. So the dollar might firm against the euro, firm against the yen, firm against the Aussie and the sterling. What we've seen the last couple of weeks is just day-to-day intraday divergence. So there have been some days where the dollar is firming against the yen, and then the next day, despite the fact that it's weaker against other currencies, it'll continue to firm. What's becoming interesting now is that central banks are starting to kind of price in different forward guidance for their interest rates. So we look at interest rates being very important for currencies because where the higher interest rate is generally attracts more currency flow. That's because your professional traders, when they do buy the physical currency, they place it on deposit. So all things being equal, they'd rather get that interest rate pickup. So if Japan is on the outlook to raise rates and the US dollar is on the outlook to lower rates or to hold them flat, what we'd always look at is interest rate differentials. Where we want to be, generally speaking, over the very long term is the currencies with the higher interest rates. This is why the Aussie dollar, I was laughing before, actually does hold up and, punch above its weight a little bit because our interest rates are always higher than the Americans. It's very hard to remember very many times where our rates were lower than theirs. So we call that a carry trade. They look to pick up the carry. Back in the old days, it was a lot of buying of Aussie against yen because the yen rates were pretty much close to zero or at zero, and we were paying 4.5-5%. So if you can get that 4.5-5% without too much effort, it's not so bad. That's why markets tend to diverge on an intraday basis, and especially in Asia, you generally don't see too much movement. Asia's really quite quiet, and normally the guys on the desks here are just sitting here looking at orders and not really wanting to push stuff too much because they don't want to trigger off stops. Despite all that stuff that you read online about brokers looking to trigger stops, no one really wants to do that. It's not a great deal of fun. So that's why we see the divergences against the majors. I think that's a good wrap up for today, Ollie. Nice to spend some time with you, mate.
Likewise, mate. Thank you very much.
All right. So this video will be placed on our VIP trading room when it's finished. It's already live streaming on YouTube. So for anyone who's there, Thanks for spending time with us. That trading room is quite a good resource for you guys. It's Ollie and I and Mark are logged into that all day long. You can ask us questions on there. You can share charts with us. The guys from the Everest Fortune Group are also logged into there, so you can ask them questions if you're sick of our voices. You can share charts with them. They provide a bit of analysis too. We also have our daily update, which this team writes every morning. If you want to get added to that mailing list, please send us a note in the trading room or shoot us an email or give us a buzz. And we also have our weekly trading technical video that's updated every Monday. So thanks again, everyone, for watching. Thanks, Ollie. I'll talk to you later.
Cheers.